Thank you for joining us for another episode of the Dealmaker Series. Today, I'm joined by Senior Vice President Brandon Herbison of Texas Security Bank. Brandon, thank you for joining us today. Tell us a little bit about yourself and the bank.
Yeah, absolutely. Yeah, thanks for having me on here, James. Appreciate it and look forward to the discussion. So I've been in banking now for about 13 years, so 14 years now. So it's gone by quick, but I kind of started through the ranks of analysts and all that, and been lending a little over 10 years now, so almost 11 now. So it's been good, been going by quick and everything like that. But yeah, certainly excited to kind of continue progressing through the career and get into this step.
Good deal. Good deal. And Texas Security Bank, you guys are a pretty solid sized bank, as I understand it,
Yeah,
right?
absolutely. Yeah, so we would like to say we kind of out punch our weight class. So
Mhm.
we're $1.4 billion in asset size, but we are a commercial bank. So Yarn has lending limits a little over $30 million today. And that continues to increase as we grow. But with the technology that we've put in place and leveraging that, we've had the sophistication to go after the larger type customers and larger depository customers and be able to take care of the needs that they have from a treasury standpoint. But then we also are still a relatively small bank to where we provide the customer service. We really don't have a 1-800 number. It's my cell phone number. Give me a call, shoot me a text, and also my team and support staff. So it's hopefully kind of giving the best of both worlds and finding that niche of a group where people are still relationship based. But again, we have the technology and all that to where you shouldn't have to really come into a branch unless you just want to come say hi and be able to handle all your needs that way.
Yes, sir. Excellent. No, I know a few folks that you work with, and you guys are very personable. I love it. So I appreciate that. So let's
Yeah.
get to it. What are you seeing in deal flow here in this quarter and in maybe the last quarter? We're in Q1 now. Is it increasing, decreasing, or sideways?
Yeah, absolutely. So I'd say I'll start off with saying we're very fortunate to be in the state and the metroplex that we are. That certainly spurs a lot of growth. People are still relatively moving here. It feels like it's slowing down, but I think we're just so spoiled for the last 10, 15 years of activity and everything that we are still growing and we're still seeing quite a bit of deals. So, as interest rates have come down a little bit, and I think people are still optimistic that it'll continue to drop here in the relatively near future. That obviously that makes my job a whole lot easier in deploying some capital and it being a relatively cheap source of capital. So yeah, we've been busy in Q1 so far, kind of wrapping up the year. Last year, certainly the pipeline's filled back up and has been good for this year. So certainly excited to see what this year will bring. We've got pretty aggressive goals ahead of us.
Excellent, excellent. I love to hear that, and hopefully this year will meet folks' expectations. I'm hearing that there's few different houses that are forecasting deal flow and deal valuations. Numbers of deals will probably exceed 2021, so that's
Okay.
quite a bar to hit.
That would
Hopefully, we'll
be
actually.
that would be unbelievable if we get back to 2021 levels. Certainly, there's some headwinds and all that we're facing and keeping eyes on. But yeah, like I said, overall, I think we're fairly bullish in this market and what's to come.
Yes, sir. So let's talk about structure a little bit. What are you seeing structure wise? Anything that's changed since Q4 or Q3 in
Yeah,
Q1?
yeah, a lot of I'd say it's starting to loosen a little bit as I think banks are starting to come off the sidelines on some things. We're kind of in this period now where we're and it has been since interest rates increased in 2023. There's a bigger variance over the last couple of years from a pricing standpoint than there was when prime was at 3.25 and great. If it's 4% rate, 4.25, three, it still is dollar amount, but it's still very cheap at that time. Then once prime got to 8.5%, some banks and a lot of them are protecting their net interest margins. Have to be careful on how they grow today. I mean, anybody can go out and make a loan at 5% today and put millions of dollars on the books really relatively quickly. Deposit rates are still there. So the banking model in general is that's our spread is what we're lending over deposits. But so we're starting to see a little bit. Some banks go out and price things a little bit lower on some things compared to I would say what maybe market is, just as they're trying to go and grow the bank again, as they've maybe sat on the sidelines for the last couple of years. But then we're seeing a little bit of kind of the conversation around non-recourse come back around on certain type of deals. That certainly came to almost become market on some certain type of industries and deals through the pandemic or shortly after. But then 2023 again, that kind of hit that timeline is when credit tightened up, pricing became a little bit more expensive, recourse came back into the picture quite a bit, where people were signing on the back end of the deal. We're starting to see that loosen up a little bit today, but thankfully for the most part, we're still able to have a lot of borrowers and everything that stand behind their requests and yeah, be a part of it as well.
Positive news there. Are you seeing maybe equity rollovers come down a little bit in percentage, or are they staying about the same?
Yeah, I'd say probably staying about the same. I mean, we're, thankfully equity is starting to come, I'd say, off the sidelines a little bit now, which is kind of nice. I know certainly some customers of mine, they've been looking forward to that, again, there when interest rates increase, it's like, well, we can go put our money in a CD at 5 or 6% or go throw it into a real estate deal here and make 7 or 8%. It's like, man, that's just not worth the risk. So now that rates start to come down a little bit, I think some of those equity deals are ready to go and deploy some more capital, and they've had it just kind of sitting dry powder ready for kind of the market to start going again. So yeah, we're certainly seeing that come back to play.
What about industry or sector wise? Are you seeing any particular industries standing out or sectors?
Yeah, there's certainly ones that have been, more. I mean, the data center space has exploded. Office is becoming probably, or still remaining a challenge as we kind of figure out the post-pandemic world of what occupancy levels look like and all of that. Manufacturing and more kind of the C&I type of businesses, owner operator, which is certainly what we like to target. That's staying very active. I mean, people are looking to grow their companies and raise some additional capital to fund that growth. So it's been, yeah, like I said, we really haven't seen a pause in that side of things. And I think a lot of people have absorbed kind of the higher interest rate world that we'd kind of been in the last couple of years and finding the new norm and figuring out how to operate in that. So it's certainly been nice from that end of it. But there's, yeah, thankfully not a ton of space that we've seen that's like, oh, this is just a huge, it's about to fall off a cliff type of thing, at least in my eyes.
Sure. And so you touched on data centers. I want to kind of continue on that for a moment because I know that other critical infrastructure, particularly around energy, is somewhat of a challenge, but at the same time, a strong interest. Are you seeing that reflecting in business at all?
Yeah, absolutely. So that's certainly not an expert in that world. I know obviously Texas is a business friendly state and has grown to be one of the leaders in the country and kind of that world. Then, especially after we all come out after the freeze of last week and certainly have 2021 in our mind from some energy potential issues. You read things and yeah, certainly the government and all that will say, hey, yeah, we're, the grid's as good as it's been. And I think that'll be an important aspect of the growth in that space for us is if that can keep up with the demand.
For sure. Let's shift gears a little bit here. What
Yeah.
about economic forces that you're currently seing impact deals?
Yeah, absolutely. Yeah. So we kind of touched on it a little bit is obviously interest rates. You have kind of a lot of different thinking and with the administration today, obviously pushing for lower interest rates. So that's kind of the $1 million question right now is what are rates going to do? It always kind of has been and continue will be. But as a lot of the real estate loans are repricing right now, that's a potential, I hate to call it a bubble, but okay, when that domino falls, what does that look like if somebody does, especially with some of the larger office and things like that, where the deals just don't cash flow and you have to, put quite a bit of equity into it to make the deal work. So I think that's certainly something we're certainly keeping an eye on. Fed decided to keep rates, prime at 6.75 for basically the next month. We'll see what they come together with and determine if between inflation and unemployment and all that if it's holding steady, if they decide to keep rates where they are. Obviously the piece is there's an equilibrium out there at some point. It'd be nice for a little bit. Again, mostly I'm biased to make my job a little bit easier, but yeah, if there's a little bit of continued rate cuts out there that kind of free up and make borrowings just a little bit easier for some people to continue the growth and hopefully not go into a recession. And at the end, same point, you can't, have it run as hot as it did there in 21, 22, where we're running at a 10 plus, inflation rate year over year. So, it's a delicate balance that the Fed's trying to, walk right now.
It is. It really is. It's interesting to keep tabs on it as well. Okay, so last question. Let's read into the tea leaves here a little bit, if you will. what do you see coming next this year or even into 2027?
For sure. Yeah, I think so. It's been a wild kind of end of 25, and you continue seeing in 26 from at least in the banking world and industry, is a lot of mergers acquisitions have happened, especially over the last decade. It's kind of sat stagnant, where a lot of banks were maybe overpriced or just didn't make sense. You've seen a lot of the multiples have kind of made it work again to see mergers and acquisitions happen. I mean, there's Veritex obviously just got acquired, Cadence, Vista. Comerica is a big one here in the Dallas area. So I think I saw something.
Yep.
I think there's 8 or 9, maybe even 10 now acquisitions kind of last year. So certainly for people like us, where we're looking to stable bank and acquire new customers. That shakeup in the marketplace opens the opportunity to hopefully acquire some new customers, where the other ones that, hey, we don't have a relationship with whatever the acquiring bank is. Maybe the loan officer or relationship manager has moved on, or gone to a different location, different bank. There's just been kind of a big shakeup. This is the first time in my career, over the last, again, 13 years, we've really seen a lot of these kind of mergers and acquisitions take place. Certainly excited for that. I think that opens up a lot of opportunity for a lot of the local banks and ones that are headquartered here in the DFW area to take advantage of. And so that's certainly positive. Then, yeah, certainly coming next is keeping an eye on what Jerome Powell and the Feds decide to do. I mean, we're at a decent enough spot today where, again, people are still borrowing and it makes enough sense. But yeah, at any given moment, you don't know what would come down the pipeline, whether it's a cut or if they increase rates again. And think we're growing too quick. So that's always the thing that we're keeping an eye on over the next year or two. Again, hopefully it's decreasing, but yeah, that's the $1 million question for everybody.
Indeed, it is. Brandon, I appreciate your insights for sure. Those of you watching, we find this as insightful as I do. To find more episodes of the Dealmaker series, find my YouTube channel or follow me on LinkedIn. Brandon Herbison, thank you, sir. I appreciate it.
Thanks, James. Appreciate it.